Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is supposed to be No Donation Friday, and it is not. We've probably led off with one of the biggest news cycles I've seen in a long time. So this is trading the U.S. Open. We're going to be looking at some short time frames on our trading strategies. I think all of them will work today. I really do. I need a little bit of leeway from you guys, though. Late night last night, I was watching all the developments, trading WTI crude oil, trading some gold, made some money on gold, lost some on crude oil. Absolutely chaos when we see a big-time news event like we saw last night, the Israeli strikes on Iran. It opens up a completely different can of worms. And I can sit around all day long, guys, and talk to you about PPI and CPI and inflation and Trump and tariffs and trade wars. None of that stuff makes a bit of difference when we start talking about a kinetic war between two nations. And right now, everybody's waiting for Iran's response. That's the bottom line. Here in the United States, we're on pins and needles. We know there are sleeper cells of Iranian terrorists in this country. We're curious to see if something happens here in the U.S. We don't know. We don't know what's going to happen right now, and the markets are showing that. You're seeing pressure on U.S. equities. You're seeing the VIX up about 13%. You're seeing WTI crude oil really spike in a big way, up about 7.7% on the session. You've also got gold. Gold broke out. I've been showing you guys the technicals. I can almost guarantee you where gold's going right now. It's just a question of how do we want to trade it? Do we want to trade it, or do we want to be a little bit safer in these conditions? I'm going to, right now, before we go any further, though, I've been doing this a long time, guys. And last night I took some hits. But it was worth the risk. I was in there trying to make a lot of money, and that's okay. Sometimes you got to set the apple, and you got to do what you got to do to trade. I will tell you right now that taking home any position over the weekend is an absolute reckless gamble. You don't want to do it in this environment because we don't know what's going to happen. There are kinetic strikes being planned and ongoing in the Israel-Iran situation. The United States staying out of it for now. But you have to remember all those installations in Iraq. There's a lot of American soldiers in Iraq still. If one of those places gets hit, then you could be seeing the United States entering the conflict. Now, this is escalation on a major level. We know that the Iran-Israel situation has been on the front burner of most traders' minds for a long time. We talked about it earlier this week. We thought a strike was coming. It was a big strike, and it looks like it's not going to stop. So right now as traders, what we've got to do is we've got to, number one, take care of our money. Number two, we've got to be smart about what we do. You don't want to lose a ton of money in this environment unless you have a chance to make it. If you showed up yesterday and you bought gold and just said, hey, I'm going for it, I'm going for 3,500, I don't blame you. You got a chance to make a real haul there. There's going to be a few obstacles in the way, but still very good stuff. If you bought WTI crude and said, I'm going for $80 crude oil, and you're trying to make that $15,000, $20,000, $25,000, $30,000, okay, you're in. I have no problem with any of that. It's when we get in and we start chasing price around going, oh, I don't want to miss out. Oh, I don't want to miss out. Or I'm going to try to call a top. That's where you start running into issues here. So just think about it this way. Right now, there's pressure on risk assets to the downside. Commodities are up, except for silver. We're going to talk about silver. Silver is one of those that just takes money from people that we don't really know why silver does not run in tandem with gold, but it doesn't. And right now, silver is actually flat. Gold's up about 1.5%. There's so much going on right now, guys. So much going on. The dollar, that probably about the only thing that could save the dollar would be World War III. You will see some people really plunging into the dollar. And right now we're up about 0.75%, about 0.66% on the DXY. So decent day for the dollar, which has been absolutely getting shredded. So we're going to do a lot of stuff here. We're going to look at a lot of markets. We're going to look at a lot of news. Dennis Maybrew, good to see you. Dennis, yeah, U.S. dollar, Japanese yen. We can certainly look at that if you want to start with that. Bring ambition into focus. Remember, if you want to trade anything that I'm talking about today, it's relatively simple. Head on over to Switch Markets. They've got 0%, zero commission accounts. They've got zero spreads. They got it all. So just get over there, thousands of markets, get in there, see what you can do. And right now, you'll see that Euro USD, XAU, Tesla, they've got Tesla CFDs, UK 100, Bitcoin derivatives, and also the US 30. We're going to trade the US 30 today right now. A lot going on, though, guys. A lot going on. All right, let's get out to price action here and see if we can find something. Okay, dollar yen was the first request off the board. For me, it's easy. Dollar yen's got a big macro wave here, spike high, spike low. There's your pullback zone. I love selling 147s up there somewhere. Now that's about 270 pips away, 263 pips away. So I understand. You say, what do I do right now? I'd say, well, sort of in a compression pattern for the first 2 weeks of this month. I would be very careful picking a direction in this market given the new geopolitical situation. So if you're serious about trading the dollar yen right now, Dennis, you got to be smart about what you're doing. You don't want to get taken to the cleaners. You want to be in a situation where you can say, okay, I got to keep my risks small. I got to figure out exactly what I want to do. For me, this would be relatively simple. Now, you can do a couple of things on this 4-hour chart. If you wanted to draw Fibonacci's and sell from there, you can certainly do that. For me, it's all about buying pullbacks. I like the pressure of the last, not 15 hours, but 12 and a half hours. I'd be looking at pullback bids from somewhere right around 143.87-ish, somewhere in there, and that's about 50 pips down the queue, but that's only if that swing high holds. Now, if that swing high doesn't hold and we move higher, then you're just going to want to adjust your Fibonacci's. You'd love to see something like that. I'd love to see 144.80 being the peak swing high, and then maybe a pullback right around 144 even, maybe 144.09 bids. I would love that. But as far as short-term price action, the pressure is definitely up. As far as what can we do with a different strategy on the dollar yen, well, I mean, we can certainly look at it with our 9 EMA. That's what we want to do right now. Interesting 1-minute chart right here on the E-mini Dow futures. Not quite an overbought or oversold territory. But let's go ahead and take a look at this dollar yen 1-minute chart. I don't advise this on Forex pairs. There's just not enough volatility or movement. However, we can dial this thing back to, say, a 5-minute. All right, there's your 5-minute chart. We just, as an RSI being our sort of our confirmation device, we don't really have a trade yet. So if I'm looking at this 5-minute US dollar Japanese yen, remember on the RSI, you've got to be above 70 for a sell and below 30 for a buy, and it just isn't there right now. So if I'm looking dollar yen, if I'm trading dollar yen, I lean back on my technicals, which would be Fibonacci's horizontal support zone right there, right around probably 143.84ish. I'd probably bump that up to 89s. Make sure that I get in there and try to execute a trade right away. So that's what I'd be looking at there for the dollar yen. Now, as far as what we want to get accomplished here, trading the U.S. Open, I want to look at the indices. So right here, U.S. 30, you can see our 5-minute chart is what I would call junk. It looks like a barcode right now. This right here, this formation, this 5-minute formation is why I recommend, if you're trading that opening range breakout that everybody really seems to love, if you guys are trading that thing, you need to work with at least a 15-minute chart. I recommend a 30. And the reason why is this kind of chop right here. A lot of folks really love 5-minute charts and 1-minute charts and all that, and that's great. Always remember on the Wall Street Open, 9:30 a.m. Eastern time, opening bell, ding, ding. Everybody's lining up. They got pockets full of cash trying to make that big score. What happens? What happens? This trades basically to the top of the range and then to the bottom of this range right here. You knocked out all the intraday longs and shorts. You see this formation more often than not. That's chop. That's garbage. It's impossible to trade. You can't do it. Now, if in fact you try to do it, keep your limits low. Your limits low. You know, it's like playing blackjack, really. If you're going to play a blackjack in Vegas and you've got $2,000 in your pocket, don't sit down at the $500 table. You only got 4 hands, and you better win. You better win. That's all I'm going to say about that. But definitely, if you're taking a peek at what you got going here on the US 35-minute, we got nothing right now. Let's go ahead. Let's back this thing off to the US 100. The US 100, there's always something going on. There really is. Nice big move, nice big opening move to the top side here out of the NASDAQ. So what are we looking for right now? Okay, we do have a potential trade. We do have a potential trade brewing right now. 1-minute chart. Okay, I'm not going to sit here and say, oh, this is easy. This isn't easy. This is very short time frames. We're going to be looking at a sell. Now, why are we looking at a sell? Severely in overbought territory. We're way above 70. I believe this peaked out somewhere right around 84. Price is still above that 70 threshold. What do we need to get a trade right now? 9 EMA with RSI confirmation. By far one of the most popular strategies we put out there. I've taken a lot of compliments for it. I've gotten yelled at a lot. I've had people call me stupid. I will tell you that if you're going to be an EMA trader, this is about as easy as it gets. Now, what you have to do to be able to trade this type of thing with any sort of success is you're going to have to figure out when the markets are moving and when to execute these trades. Right now, the markets are moving. I would very much like a short right now in the US 100. You say, Shane, why? The intraday pressure's all up. Look, we're breaking high. We're going high. And I'd say, yeah, but the pressure's still down. You're still off about 0.5%, off about 100 points. I would love this thing to rally up a little bit higher, stay in overbought territory, and then give us that sell signal. What would the sell signal be? When the bar closes beneath the 9 EMA, we're looking to sell the market. Now, we can get away with that because our RSI is in overbought territory. So if we're in overbought territory and we get this pullback and an opportunity to sell, you got to take it. Your success will depend on your profit target and your stop loss. Stop loss location's easy for me. I have no problem with my stop loss, but measuring that follow through, measuring where the market should go with respect to the amount of volatility and participation in said market, that's the magic trick. And that's why most people that trade 9 EMAs, they run into this. They try to trade it during this stuff. They go short time frames when the market, it does not have the volume that it does right now. If you do that, you will lose. Guarantee it. There's no question about it. Believe me, I know a little bit about losing. You want to stay out of flat markets when you're trading EMAs. I had a guy that said he was a computer scientist yelled at me the other day. He says, you don't know what you're talking about, this 9 EMA. And I go, listen, partner, you trade it when the thing's trending. You trade it when the market's moving. We use the RSI to tell us when the market's moving. Okay, so right now it's coming to us. We're going to stick with this chart for a minute, see if we can get a trade. I know it's a little bit boring just watching one chart, but we're going to go ahead and do that. Right here, what are we looking for? In your mind, get ready. Get ready to be a trader right now. Okay, we're getting ready to trade. What are we looking for? We want a negative bar close beneath. We want, well, it could be a positive if we go gap down, but we want a negative bar close beneath the 9 EMA. We've got the conditions are set. The apple's ripe. We're ready to pick the apple. We just got to figure out which one we want to pick. And right now, we've got to get in when the getting's good. And that's going to be when we get a bar close beneath the 9 EMA. Deep in overbought territory, we want to get that sell. I'm going to let this tick for another minute. I realize that we've got a lot to cover today, and I don't want to sit here for an hour just trying to pick off a live trade. But it's when you can execute these things live, it really does a lot more good than just talking theory. Let me see. Roger that's got some fire going in the live chat. Good to see you, Roger. Sure appreciate everybody. Yes, sir, always a pleasure. And Dennis, yeah, a little bit light in the how to trade trading room. I don't. We got a few folks in here watching, but that's okay. We've been juggling the times around. Today's been an interesting week. We're going to be back to normal with our schedule next week. But right here, we're looking to see exactly what we got cooking. Now we're down to about 18, 17. I would love to see that negative close. Give me a negative close, gap down. Give me a negative close beneath the 9 EMA, and we're going to pull the trigger on it. We've got sell. We've got a sell market order in there. Why are we using a market order? Because I want to get in immediately on that bar close. Market order is going to give us the best opportunity to do that. Now, it looks like we're getting close. We're taking one more minute, and then we got too much other stuff to cover if we do move higher. Interesting price action, though. Right now, the 9 EMA is keeping us out of what looks to be a fake-out type of a trade. This is a prima facie evidence of why you just can't trade the RSI by itself. If you get into a trending market where the market is, in fact, trending north or south, you'll sell into the teeth of a real strong trend, and you'll end up just getting destroyed. So you want to be very careful with that. All right, we're just going to have to come back and monitor this one. In retrospect, it doesn't look like we're going to get a chance here. 25, 24, 23, 22, 21. We're not going to get it on this bar. I'm not going another minute with it either. We'll just come back. We'll monitor the developments here, and I'll be sure to let you know exactly what the trade would have looked like and how it performed. To me, this looks to me like just a very, very good place to step up and sell. Man, this is tempting just to sit for another minute. All right, we got business to tend to. All right, in any case, the big news here is the Israeli strike on Iran. There's no question about it. I mean, it really is probably one of the bigger news cycles that we've seen during the overnight in a long time. The U.S.-China, trade wars, the markets are sort of used to tariffs. They're sort of used to, Trump calling people numbskulls and yada, yada, yada. But this strike, this June 2025 strikes on Iran, this was significant. I watched it on TV last night. It's one of the things now, we have cameras everywhere. We have cameras absolutely everywhere. And you can see that there was a significant strike, killing top military officials. They were targeting scientists that were in the nuclear program here. It's Operation Rising Lion. Netanyahu says that this will go on as long as it takes. But there you go. Iran says Israel's strikes on its nuclear facilities are a declaration of war. Iran officially, supposedly declared war, outright war. Now, there's always sort of been tension and a war going on, but now it's a hot war. And what a hot war does is it takes things to the next level. That means there's going to be tit-for-tat kinetic strikes, probably back and forth for the near future. This changes a lot of things. This changes our oil pricing, of course. We're going to talk oil here in just a second, but it also changes our outlook on the Middle East. Now, instead of thinking that, okay, this is local to Israel, Hamas, this is local to that specific region. Now you're opening it up to the entire Middle East. Remember, the strikes, when Israel's bombing Iran, Iran's bombing Israel. Remember, these things don't happen in isolation. They have to fly over Iraqi airspace, and what can happen is unintended consequences. And when there's something like an unintended consequence in a kinetic exchange like this, that's when things go to the next level. That's when people start to panic. Maybe something gets hit that shouldn't get hit. Maybe a U.S. installation gets hit. Maybe Iran decides to strike something like the UAE or Saudi Arabia. Trump was just in that neck of the woods. He guaranteed those people the safety. That's what he guaranteed. He guaranteed to both. That's what the free plane from Qatar and all that stuff was about. the possibilities here are endless. I could sit here and war game it for you all day long, but I'm not a military strategist. I know people that have been in the region that served a lot of time and paid a lot of prices in Iraq. I know that. But the actual way that this is going to unfold, it'll be a surprise that shakes up everybody. Right now, the tit-for-tat back and forth, air strikes, drone strikes, whatever, market will get used to that relatively quickly. Even the Iranian response, unless it's big, the markets are going to get used to it. It's if there's a surprise. That's what we're looking for. So you're looking for a U.S. base to get hit. You're looking for maybe a U.S. embassy to get hit. You're looking for something that we aren't expecting, and that's what takes all this to the next level. Unfortunately, we're in that situation. All right, we're going to go ahead and sell this at market. Looks like we're going to get our close. I'm trying to do 6 things at once, but hey, that's the U.S. Open. Okay, there's our sell. We're officially short this market. Now, what we've got to do right now, we should already have done it, but what we've got to do right now is we've got to say, okay, where's my stop loss at? A couple of places to put it. Right here. You can put it right above this swing high. I'm going right above that intraday high. Right above that spike high right there. Why? Because I want to give this room to work. I want to give this thing a little bit of chance to sell off. What I don't want to do is I don't want to play too tight and get stopped out on a reversal like that. I don't want to even really want to be here over this. Why? Because if I'm going to risk that much, I'm just going to risk the top of the market. Now, if we lose, we lose. Remember, this is what it is. This is high-risk trading. This is 1-minute chart on the U.S. Open. Now, we're trading the U.S. 100, a highly volatile asset. Remember, these are demo dollars. This is probably a position size you could take if you had a $50,000 account, something like that. I believe our total risk here will probably be like, I don't know, $1,500 or $2,000. You could do something like that if you had a $50,000 account, maybe a prop account. You'd want to do something like that. So the question is what am I shooting for here? I love this chain right here. I love market structure when I'm deciding exactly where to put my profit targets. This is a nice chain. This is a 2-minute sweep. We have this right on the open, bang, bang. I could easily see that filling in. Now, if we go trend day up here and the US 100 buys back everything, well, I mean, that is what it is. And it looks to me like we're going to get stopped out here, but that's okay. We're not out of it just yet. What we're looking for is we're looking for a profit target probably somewhere down in there. Right down in this order block here, right during this pre-open. I can see that happening very easily. That mirrors the macro trend that we saw during the overnight, and that really mirrors market sentiment right now, which is negative. However, we're trading on a 1-minute chart, and essentially what we're trying to do here is pick the upper quartile of the U.S. session. We're trying to pick the upper quartile of price action. That can be very difficult, but here's the deal. We've got our indicators. We're in overbought territory on the RSI. That's our confirmation. We got our bar close beneath our 9 EMA, and now we're going to play this thing to the short, which is with the macro trend and with the sentiment. I don't think it's a bad trade. I don't think it's bad. We just got to wait and see if we can get this thing cooking to the downside. That's a technical trade. And if you're going to be a technical trader, you know, you got to know when to trade, which is when it's active, which is right now. This is when you want to do this kind of trade. But you also just have to be ready to take your lumps, the good with the bad. We had a winner the other day, a big winner that we posted. We did a live stream. I believe it was gold. We had our gold trade go up and get paid. And now we're sort of back with a US 100 trade that I don't really love. I would love it on a 5-minute more. I can tell you that. But right now, 1-minute chart, if you're going to, if you're going to dance in the fire, this is the game. Then it's tough. Right now, we're in the negative. We're not in the negative by much, but we're in the negative by about 15 points. And it looks to me like we're going to break back above. I don't like the trajectory right around this EMA. This 9 EMA is really flattened out. I don't care for that. But if we're going to turn the corner and come off, this is what it's all about. You're going to take pain. You just got to wait and see if we get the follow through. I like this doji. We got an opportunity here. Okay, now we're starting to cook with gas. Now let's see what we got here. Now we're right around scratch. I don't know. We're down a little bit, about 5 points. That's nothing in the NASDAQ. But let's just see what we've got. Macro trend still down. We're off 142 points, about negative 0.67 on the day in the US 100. I love the action in the US 30s, off about 1.24%. That's a pretty big move. Let's see, we're down about 584 in the Dow. The NASDAQ's down about 180. I mean, if this feels like it wants to go. I mean, I don't mind being involved in this trade. This feels to me like it wants to go, but right now we're still getting hit. And the big thing you got to look at is this trajectory of about the last 4 minutes since we've been in this thing. It's flat. I don't care for that. We need to get something going here or we could be in trouble. This is trading. Look at inverted hammer now. Now we're going positive. Living on a razor blade, that's for sure. So we're going to wait and see exactly how that pans out. But we got a lot to cover. I can't just sit here and watch this trade unfold all day long. That's for sure. Let me see. Can you take a look at the NQ? Absolutely, Geo. That's the NQ right there. The US 100 is pretty much what we're doing there. Let me see, Geo. What are your RSI settings? I use the factories. I'm just using the 14, the period of 14, and based on the bar close, on the closing price. That's essentially it. Calvin, good to see you, Calvin. Welcome. Always welcome. No, it's good to see some familiar faces around. That's for sure. I hope your gold trading's been going well. Mine's been going pretty good. We're going to talk gold here in just a second. Our technicals, it looks to me like we're going back to 3,500. It's just a matter of time. Let me see, Calvin, just in. Israeli officials say President Trump approved the attack on Iran and coordinated it with the U.S. They claim the reports of Trump blocking attacks were intentionally made to trick Iran. Ah, boy, the plot thickens. Remember that trip to the Middle East, guys. Remember Trump's, okay, we're going to get swept out that fast. Boom. Came in, inverted hammer, broke against us. We're toast. That's life. In any case, remember that trip to the Middle East, Qatar, the UAE. All those folks rolled out the red carpet, and it was for protection. All right, we're going to go ahead and scratch this. And remember, these are demo dollars, but you could probably make that trade on a $50,000 account, $2,000 risk. That's really not that big of a risk there. But, you could definitely do it. Now we got stopped, and now price is sort of reversing. That's just the way that it is. We'll wait and see if we get another crack at this NQ. As far as, I'm doing very well, Calvin. Thank you. But interesting type of a trade. I don't like to see that where we get stopped and then rotate back down. That's the type of thing that makes your hair fall out and drives you crazy. But it is part of the game. It's definitely part of the game. Look at that reversal. Those are tough losses to take right there. That's a fact. All right, we got a ton more to cover here, so let's go ahead and get on with the program. As far as oil goes, that's my specialty is WTI crude. I'm a commodity specialist. This story is like this. Israel-Iran strikes likely, just opening salvo as the region and the markets brace for what comes next. That's really hard. That's really hard because we just don't know. Iran launched more than 100 drones toward Israel territory Friday morning following Israel's overnight missile strike on the country, and it looks to me like it's just the beginning. Friday strikes and the Iranian response are likely just the beginning in a rapid cycle of escalation, according to regional analysts. Now, you're not going to learn much from CNBC. They're going to tell you what they want to tell you, and they're going to paint it a certain way. So what we've got to do is we've got to, sort of make decisions on what's important. At this point, I'm falling back on technicals. Be aware that you're in just a hot news cycle, but the technicals are very, very important because we have the price action to trade with a little bit of confidence. So something like this is going to tell us a lot because, believe it or not, the potential of maybe a World War III, all right, maybe a widespread conflict or war in the Middle East, escalation, is going to affect U.S. interest rates. If, in fact, you see a global war begin, another one, a lot of folks believe Russia-Ukraine is already a global war. But if you do see this type of escalation, your likelihood of seeing rate cuts in the near future from the United States Federal Reserve is going to be very real. So June looks like it's locked and loaded. That's going to be next week. We're going to go ahead and have FOMC live for you here. But now we're looking towards July. So what happens in July? Well, we're still, we got about a 77% chance that we're standing pat. Interesting. The 17th of September, what happens there? That's really when we're thinking we're going to get our first rate cut of 2025. Remember last fall, the Fed was anticipating on their dot plot 5 rate cuts for this year. None of them. We haven't got any yet. So this is what I'm watching relatively closely. Now, if in fact this war, the Israeli-Iran, if this thing goes, I won't say nuclear because I don't want to make a bad pun, but if in fact it does go big, and looks like it's going to go really big, then you're going to have to be in a situation to really expect rate cuts coming a lot sooner rather than later. And a lot of that's baked into the cake. You've got a tremendous amount of pressure on WTI crude, and a lot of that is, of course, the region. Anything in the Middle East spikes crude oil. That's just, I've been watching that since 1991. 1992 is one of the best stories that I was ever told by my mentor, Gary Vernier. He was trading at the time for Shell Oil, and they had huge positions out. They had huge long positions out with they had huge long positions on WTI. They were playing crude oil to the long side because they had intel on the ground that the U.S. was going to invade Iraq. This is Gulf War I. This is 1992, I believe. They had intel that they were going to invade. They knew exactly when they were going to invade, and they thought that even just some skirmishes at the border were going to spike WTI crude oil prices. We didn't really have the missiles that we do now. We didn't have the tech. We didn't have all the drones and all that stuff. We didn't have that. We're talking ground invasion. We're talking sorties. What are we talking? A-10 tank killers? We're talking tanks. We're talking a ground assault here on Iraq, and the idea was there was going to be some skirmishes at the border. And what that was going to do is spike WTI crude oil prices. It didn't happen. It didn't happen. The U.S. went in there, the journalists went in there, and the Iraqi troops just went into self-preservation mode. They were surrendering to journalists, and the price of crude oil didn't go up. It crashed. And he said that was one of the biggest losses that their trading desk ever took, and it was a tough one to take. Said I was out to dinner, and one of their clerks came by and said, hey, you got to get back to the office. We got some serious business going. So just because we believe Israel and Iran are going to hit each other, we should buy the market. It's almost not enough to know that. You've got to know if it's going to escalate or if there's going to be an accident or if there's going to be other countries getting involved. That's what will drive crude oil to the next level. Now, this is a significant spike. This is a monthly chart here. I was sort of watching some of these resistance zones to the top side relatively closely, but they don't matter. When you have a news event like that, they just don't matter. So right here, we're looking at 75.33. We sort of topped out, up at 77. You can't take that trade and hold shorts there. That would have been impossible to get. But something like this, do we want to buy pullbacks right now for the rest of today? Probably. Still up about 5.94%, 6.76% in the futures market. I would say that there's a real chance that the sell-off continues. But you can still get great trade location to the top side and be able to really scalp to the bid. And I know I'm sort of talking in circles, but what I mean is this. Put this in perspective. Put the move in perspective. It's a major move. Major move. I'm always curious of why the range the day before is so tight. Somebody knows something. Somebody always knows something. Remember, we're retail traders. They always know more than we do. Always. It's just the way that it is. So if I wanted to buy a pullback, how could I do it? Well, I'm looking for a spike low right there. That low right there, 64.60, 64.63. That's not good enough. That's going to be probably where I'm going to have to base my Fibonacci's off of, is right there, that spike low right there. So something like that. 71.72. You're probably going to be pretty good from 71.79-ish. You're probably going to be pretty good there for 25 pips or so. Do you get it? 71.79, it's only about $1 down there. We could easily get that. We could easily get that in the next half hour, the way that it was moving last night. So I'm definitely interested in buying pullbacks right here in U.S. oil. Let's go ahead and break this down to a 30-minute chart and just show you exactly what happened. I was involved right up in here. We were buying, or I was buying right up in here at these retracement levels. Really touchy stuff. I was using about a 1 minute and a 5 minute chart. The success rate was nowhere near what I expected to be. But you can see that this area right here that I just pointed out to you, we've already tested it. You've got an inverted hammer, and now we're rolling. If price sort of stagnates, you can have a pretty good chance probably to bid that again. So be ready. Just be ready for anything if you're trading WTI. The 30-minute, the opening hour since really the traditional Wall Street open, you're up, you opened somewhere right around 71.77. Now you're up about $1.29. $1.14. So you're right in the bullish sentiment is still there for crude oil. The question is how high do we go? How fast do we get there? And no one knows any of that. We could see a sell-off later in the day. You could hear a peace deal announced. Remember, Trump speaks there's a meeting with the National Security Council, I believe at 9 a.m. my time, 11 a.m. Eastern, which is about an hour from now. And I would expect a presser after that. And they're going to talk about the strikes, and they're going to talk about the way forward. For all we know, they have people on the phone, and they're ready to announce some sort of ceasefire and a peace deal. We don't know. We just don't know. And if that does happen, this market will crash. So if you're going to trade crude, be careful. Don't be stupid. Don't go rushing in with huge leverage. And if you do, best of luck. I hope you win. I really do. I hope you win. But if you're going to sit this one out, I understand. Believe me, I completely understand. Let me see. NQ's playing out, Geo. Yeah, it looks to me like this is one of those that that breaks my heart. I don't stuff like that. I don't like. But it's hard to hold that position. We had it padded a little bit. You could have padded it maybe up here. But then the question becomes, if you're not really going to use market structure, do you just use big round numbers? I mean, you could go with something like that. You could have put it up around 28.05 and then get the big runner. But you're starting to see this come down. That right there, a lot of people don't believe in stop hunting. I remember there was a couple of analysts here and trading coaches before that I used to just get in arguments with. They didn't believe in stop hunting. They said it didn't exist. Wrong answer. That's a stop hunt. I don't care what anybody says. You guys are smart money traders. What is that? That's a test, a stop hunt, and then a liquidity sweep. That's a stop hunt. They knew where our stops were. We were right. They knew where our stops were, and they took us out, and now the market's coming off. So we'll see. We'll wait and see. I don't know. It's incredible. Look, now we're bullish. This is chaos. Chaos squared. Let me see. ND. Hi, Shane. Great stuff. Can you do Bitcoin? Yeah, I'll go ahead and look at Bitcoin here. A couple other things, though, I do want to look at, and then I'll go ahead and sign off. I know I'm sort of running long today, but that's life. Sometimes we've just got to get in and get the job done. These are the technicals that I've been showing you for a long time. Bidding gold the entire way. Don't have enough money to buy it right now and wait for the run to 3,500. I don't have enough money to do that. Very few people do. You could dial your leverage way down, I guess. You're buying pullbacks, though. Traded up above last month's high, 34.35, and then your high right there is 34.46. That's pretty much a layup for $10. So the next big level in play looks to me like about 34.50. I fully expect that to get tested. If it doesn't, I will be shocked. Shocked. Given this geopolitical environment, it's hard for me to see any scenario where gold does not tick higher and hit 3,500. So the real question is what happens now? I like gold to the top side. I mean, I don't know what if Calvin has an opinion. I know he's a gold veteran, been trading it a long time. I love it to the top side here. The geopolitical situation's there. The market drivers are there. The dovish U.S. dollar that just sort of keeps falling no matter what. That's a market driver for gold. If, in fact, this war escalates between now and next Wednesday's Fed meeting, what's Jay Powell going to start talking about? They're going to start talking about supply chain issues again. That brings rate cuts sooner rather than later. Interesting stuff. So if, in fact, we do break above that, and we did, I don't see any way around this. I'm watching this closely. It looks like 34.50 is sort of the stumbling block right now. Once that's gone, 35. And once 35's gone, I mean, realistically, 37.50, that could happen fast, especially if this thing escalates. 4,000. Now, believe it or not, I was reading stuff from Goldman and Sachs the other day, and they were calling for 4,000 this year. And I go, that's a hell of a change from what you were calling. They were only calling for like 3,200 back in January, something like that. Now they're calling for 4,000. I mean, what is that, a 30% adjustment, something like that? Circle the big round numbers. There's no rules. There's no rules on how high these things can go. There's no rules on how high gold can go. It could go to 5,000 or 10,000 just depending on the situation. Be careful with it. But right there, you want to trade to the long. Let's go to a daily chart and see exactly where we're at. I mean, the breakout's on for me. We had a trend line here. I drew that trend line the other day. That was moderately useful, I guess. A lot of trend line traders out there believe in them. I'm not a big trend line guy. Would love a great big pullback. Not going to get it. Maybe something like this. If we go up and test 35, that's not bad. Maybe we do something like that. Then we start really getting aggressive from 34.50. That's when we show up with the bib. I don't know if you guys have gone to the buffet, the crab leg buffet. You put the bib on, you get the lobster crawls, the crab legs, and the prime rib, and you go deep. You go deep because you got to. You got no choice. But something like this, would love for this to rally and have an opportunity for us to bid a big round number. Would absolutely love it. Do we get that opportunity? I don't know. Right now, we're seeing a little bit of, we're seeing, the sellers really defend last month's high. There was the break. I was watching. I was trading it. There was a break. Reversal. Second time up. They're protecting it again. So you sort of have a 30-minute double top there. And boy, where does this market open Monday? It'd be what I would ask. That's for sure. Let me see. Calvin, absolutely. I got a long bias on gold, but as you said, if a peace deal comes, it could collapse as well. Yeah, I mean, that really is the dynamic here. We have a lot to contend with as active traders. Full disclosure, my 2025 has not been anywhere what I thought it was going to be. There's been a lot of intraday price action, a lot of sweeps. The tariff stuff I felt was pretty easy to read. I thought that we would see really a lot of that tension subside relatively quickly, and we have. And we really have. You remember the early April market crash on the trade war and all that. It just didn't last. It didn't last. We didn't get into that big bear market that I thought was coming. It didn't happen. Now we're back up, sort of near all-time highs with those U.S. stocks. The only thing that could really derail, I think, the rest of this year is going to be a war. And, I laugh because it's really all you can do when the situation is so dire. But this could be the beginning of World War III. We know where the lines are drawn. You're going to see probably Russia and China come in and back Iran. The U.S. is going to back Israel. There's a lot going on. No question about it. Silver doesn't make any sense. A lot of people say, Shane, do you like silver? I go, well, I mean, silver's okay. Here's some old analysis that we did. 35, we talked about compression right around 35. There's your break. What do you want to do with silver? You want to buy it. The gold to silver ratio right now is right around, it's not quite 100. It was 100 when I wrote this, but it's not quite 100. It's just a little bit beneath. Monthly, you're up almost 10%. Let's go to a weekly chart. This is pretty good stuff right here. You got sort of a doji week. Silver would be a pullback buy in my book, no question. 34.89, 35 evens. I mean, you really couldn't beat bidding 35s. You might get it. You really might get it. And you might get it next week, but this could be pretty good. This could be pretty good. Do we want to buy it on a daily, like for an intraday scalp? I don't think so. Pullback's sort of already over. It would have looked something like this. Spike low there, spike high. Failed right in front of 38%. That means the trend is still strong, but it's messy. It's nasty. It's not like gold. See this? I mean, a lot of folks are bidding up here and just getting sort of smoked. Inverted hammer, that's sort of a signal that you're going to see, maybe more bullish price action. But I would stay away from that daily chart. I think that's trouble. That's trouble. You want the weekly. If you can get a shot at the weekly early next week, that would be guns up. Absolutely. All right. Let's see. One other market I want to cover here, and it's, a lot of sad stories this week. Boeing. Everybody saw the plane crash probably yesterday in India, 241, and there's so much video on it. There's video from inside the plane that was posted to social media. There's video of the plane going down, and it was one of those big Boeing Dreamliners, one of the most sophisticated airliners in the world. I mean, if you're getting on one of those, you feel pretty good about your chances. Those don't go down, and that went down. So it's 241 people dead. There was one survivor, and I don't know if anybody's seen the video, but the gentleman walks away. He walks away from a plane crash. I've never seen anything like it in my life. You don't walk away from plane crashes. The man walked away. So what does that mean for Boeing? It's a nightmare scenario. That's one of their marquee aircraft, and there's a problem. There's going to be a problem because there's video coming out of how all the electronics didn't work on the plane. And what happened was the electronics looks like the flaps. They didn't get enough lift on the flaps, and they just couldn't get the altitude to go at that low of a speed. So it was really a sad thing, but what this is going to lead to is a major investigation, and probably they're going to end up grounding a bunch of those Dreamliners until they run a full investigation. I don't know if you guys remember the 737 MAX catastrophe back in Africa a few years ago. That crashed Boeing stock. Crashed it. This is going to do the same thing. So right here, you've got your 920 crossover on the daily. It looks like you're going to get a crossover in the next day or so. That's going to be sort of a situation to sell, which is exactly what you would expect in this type of given this type of scenario. But from a broader perspective, I hate to be, as a trader, and many times we do analysis and it comes off as just being heartless. The plane crash and the humanity is what matters. The money is secondary. It doesn't mean anything. But if you're a trader and you're looking for opportunity, Boeing's not going anywhere. They're going to have some problems with this Dreamliner. They're going to have to ground a bunch of them and do a bunch of investigations and tests. There's no question about that. It may even hurt their future orders. Somebody around the world may get pissed off and say we can cancel a bunch of orders for the Dreamliner. We could see that happening. That's possible. For us, as traders, we say, okay, what do we want to do? Do you want to buy it right now? Not really. You've taken out 200. There's no reason to jump into this frenzy. It's off about 7% this week, but right there, 38%, maybe like a 185 or a 187. You might get that today. If you get that today, that's probably a buy. That's probably a buy. Now, you also have another order block setting up. You got an order block right in here. You could wait for 50%. Big round number of 175. You could do that. You can wait for a deeper pullback, 162 or 147. It's all possible. All this is possible. Anything's possible right now. But I would say that probably most traders, or most, not traders necessarily, but intermediate term investors or stock players that'll buy these things and hold them for a year, depending on their tax situation, going to scale in there, there, and there. You can almost guarantee it. Maybe a little bit right in there too, 175. A lot of times they dollar cost average into a stock play. That's not wrong. Dollar cost averaging into losing futures and derivatives plays is suicide. So if you're playing stocks, you can get away with this stuff. Dollar cost average in, meaning you add, and you bring your average price of entry way down. That's one way that you can flip that risk versus reward in your favor. For me, it's hard for me to see Boeing going anywhere. They're going to be around. It's just a question of if you buy in at these levels, how much money do you have and how long do you want to sit on them? Institutions will step up and start adding Boeing on this deep pullback. That's just sort of the way that this game works. Gold futures. Not really much there. Oversold. That's a fake out there. Let's go to a 5-minute chart here. Oversold. That would have been your entry. Would be real tough for me to sell gold right now. Real tough. Compression, though. Sort of looks like your bearish breakout's setting up. Maybe you get it, maybe you don't. US 100. Yeah, and there's your break. So that's part of life. I hate to say it. Losing like that is a frustration that you just have to get used to. Put a punching bag in your garage, go hit the gym. That happens. But it doesn't happen to us very often. Usually pretty astute with our stop loss location. We got had right there. That's the hardest part of all of trading. You'll never get used to that. I've been doing this since 2011. I don't get used to that. And that was a demo trade. I'm still angry because it's going to go down and hit our targets. Sound technicals, sound fundamentals. We feel pretty good about that trade. And we just got knocked out by a few pips. And then to see the reversal, that will happen to you. If you do this long enough, that will happen to you. So you just got to be careful with it. Put things in perspective, manage your risk. If you're down to your last $20 and that happens, that's the old adage. You're in there, you're trying to get out of Vegas, you got $50 left, and you go throw it on red or black, and it comes up green on the roulette wheel. That's really what happened right there. Take it with a grain of salt and move on. Monday's another day. You still got a lot of trading left today. All right, guys, that's the U.S. Open. There's so much going on right now. I could probably sit here and just riff on the situation for another hour, but there's no real reason to. Let me see. Michigan consumer sentiment higher. I'm still in it. Geo's still in it. Good for you, Geo. Good for you. That's why a lot of folks go with time-based stop losses. They'd say, okay, here's my level. Here's my stop loss right here. I don't really want it in the queue. I'm going to watch and see what happens for a minute. A lot of people do that. I do that a lot. In this case, though, we had to cut it off somewhere. But this is going to go down and hit the target. No question about it. All right, guys, I'm going to go ahead and sign off. I want to thank everybody for joining me this week. It's been an interesting week. I've been in and out of the markets and sort of in and out of the live stream schedule. Next week, we'll be posted in the How to Trade trading room. I'll have that up probably in the next hour or so. We're also going to post a little bit of analysis and maybe break down a key market and a trade idea after what's been one of the biggest news cycles we've seen in a long time. One last word to the wise, everybody. A lot of smart people in here. A lot of folks that are just starting out, too. You have the aptitude, you have the desire, you have the will. You want to trade. Know when to lose money and when not to lose money. And I'm going to tell you straight up, if you take any positions home over the weekend, be ready for anything on Sunday's open. Accept the risk. Understand the risk. Say, well, this could either go really good for me or really bad for me. And I hate to say it that way, but when you go home for the weekend through a market closure with an open position and something happens, and it happens a lot on the weekends, you're at the mercy of your broker. You're at the mercy of liquidity providers. You may be in a position you can't get out of. And for me, I'm not into that. I like to be able to get out with just a click of a button. Something to think about there. Let me see. Chris Band. Yeah, Great Britain pound. USD is going to the moon. Eli, good to see you. Thank you. Absolutely thank you. Peace out. Have a good weekend. Absolutely. You guys have a fantastic weekend. Finish the week strong. Don't give anything back. If you made a bunch of money on one of these trades this morning, don't give anything back later today. Rack them and come back Monday. Monday is going to be another high volatility, great trading day. No question about it. All right, everybody. That's a wrap. That's a wrap for this week. Trade the action well, and we'll talk soon. See ya.